Let's now focus on some of the earnings and the impact that we are seeing on specific stocks. IIFL Holdings came out with its numbers. Its profit was up 136 odd crore rupees. The stock is flat and in the red right now. Total income was higher at 1108 crore rupees for IIFL Holding, a gain of about 10%. Here at NDTV Profit, we spoke to Mr. Prabodh Agrawal, CFO, Group CFO at IIFL. And when we asked him about the overall performance in the quarter and how did the quarter go vis-a-vis the same quarter a year ago, then this is what he told us.
Last quarter and the last year, our growth was good. Our full year earnings have grown at 14% YOY to 511 crores. And this is driven primarily by the NBFC and the wealth businesses. These two businesses currently contribute to about 90% of our total profits. The third business is the agency business, which is insurance and broking, which contributes to the other 10%. And there we have seen a decline, but the growth has come from the NBFC and the wealth businesses.
Right. So, the segment where you've seen this decline in the capital market business outlook, where do you see the improvement really coming in from and how soon?
Yeah, so, as I mentioned, it is capital market business which has declined. And capital market, if you look at that's entirely dependent on the capital market conditions. So last year, if you see, the market turnover was down about 6% YOY for the full year. And our turnover also declined roughly in the same proportion. In addition, the commission rates have been declining. They have been under pressure, both on the retail side and the institutional side. So overall revenues were under pressure. We have managed to reduce our costs, but still, the profits were down YOY. Now, this is something which is very difficult to predict, as to how, this would pan out in the next 1 or 2 years, because of the unpredictable nature of the capital markets. The business is profitable to us, and I think we are very well positioned in terms of our retail franchise as well as our institutional franchise. And as and when capital markets look up, I think this business should make a higher contribution to our group profits.
Can you explain to us the kind of performance that your NBFC business had shown in this quarter in terms of asset quality? What was the number out there, and net interest margin? Did that improve as well?
Okay, so if you look at in talking about margins, our margins did decline last year. Currently, our NIM is 6.1%. And the reason for the decline in margins last year was because we undertook a change in asset mix. Our asset growth was primarily driven by the retail mortgage, the commercial vehicle, and the SME segments. While two of our high-yielding segments actually degrew last year. These are the large mortgages and the gold loans. And also our capital market business grew in single digits. So this was a conscious strategy to rebalance our portfolio and de-risk our portfolio. But because of the decline in proportion of high-yielding loans, our overall margins were under pressure last year. I think the change in asset mix has happened, and therefore the margin should stabilize at current levels.
Okay. Also, what we have seen recently, that fundraising via bonds has been on a high. Now with banks easing rates, do you think there is some sort of a shift that we are likely to see very soon? Correct.
The thing is that, we have not yet seen the full benefit of rate cuts by the banks. So while the RBI has cut rates more aggressively, but as we all know, the banks have not reduced their lending rates in the same proportion. Now that rate cuts are happening, that again was delayed because of the year-end liquidity crunch. Now that the liquidity crunch is over, we expect borrowing costs to fall. So I think bank borrowings will be an attractive option over the next few months.
And where does it stand currently for you?
So currently our incremental funding cost is around just below 10%.
Do you really expect a change? Mr. Agrawal,
yeah, so currently our bank borrowings are 48% of our total borrowings. That may go up a little bit. it may go up a little bit, but we would also be looking to raise money through NCDs, through funding from multilateral agencies, and of course short-term funding is being met by commercial paper market.
But any number that you can give us as to how much could really be your requirement in FY17?
See, that will depend upon our loan growth. And loan growth in FY16 was 21%. And going ahead, while we are not giving any guidance in terms of loan growth, but I would expect that a similar kind of growth is possible in FY17. We have a diversified product range, and there are enough growth opportunities in the areas we operate. For example, home loan is a high growth segment, commercial vehicle is a high growth segment, SME loans are another high growth segment. So I would think that that kind of a growth is again possible in FY17, and therefore based on that, our borrowing requirements will also grow up in the same proportion.
But still no target as yet has been decided in terms of how much really could that be?
Yeah, I don't have a number, but yeah, it will be, as I said, it will be depending upon the loan growth that we actually achieve.
Right. Mr. Agrawal, we've recently seen some sort of consolidation coming into the broking business. Can you tell us how do you really stand to benefit in that scenario?
Yeah, so the thing is that, of course, the broking conditions are not very favorable, and therefore we have seen closure of a large number of small brokers, and the industry has consolidated. We are one of the oldest brokers have been in the business for more than 20 years, and our broking business is profitable, very profitable, both retail as well as institutional. And of course, the revenues and profits were down last year because of market conditions. But I would expect, as and when the market conditions improve and the volumes go up, we should be benefiting from that.
Right. Let me also take this opportunity to ask you about your thoughts as far as the markets from here are concerned. Where do you see them heading from here?
Yeah, I can give you very broad, I don't follow the market that closely, but my view is that, the markets are likely to remain range bound in the near term. There are some uncertainties, some challenges for the market. First being the global uncertainty. The outlook on China, US, etc. is very uncertain, and that impacts the FPI inflows into India. The FPI inflows, as we know, has been very erratic in the last few quarters. They have picked up in the last 2 or 3 months, but before that, we saw a huge outflow. Going ahead, I would say that that remains a black box. The domestic flows again are have been weak in the last 2 months. I would expect that with the medium term, the domestic inflows should remain strong, but the near term, difficult to say. That's on the flows, but on the fundamentals, the corporate earning growth has been a disappointment. We all have been expecting a pickup in FY16 that did not materialize, and right now, if you look at, we may end up FY16 with zero growth in earnings for the top 100 companies. Even the outlook for FY17 is not very rosy, given the weak industrial environment and the weak consumption demand. And therefore, assuming that we have a high single digit or a low double digit kind of earning growth in FY17, I would think that, the upside for the market would also be capped.
Right. So that was a view on the markets and the macros and the earnings, of course, that have come out so far. In terms of sectors, Mr. Agrawal, what would you say, what looks good right now?
Okay. Broadly, the sectors which we like private banks, we like certain segments of the industrial segment, we like the auto, and we like the IT segment. We are still very skeptical of the commodity space. We are skeptical of the PSU space, the pharma sector, the utility space.
All right, and last question that I want to ask you is about the activity pickup that we've seen as far as the IPO market is concerned. At IIFL, how are we really looking to tap that market ahead?
Okay, we have an investment banking arm, and our investment banking arm has been doing a few of these IPOs. if the primary market remains buoyant going forward, then of course we will get our fair share of these deals, which is how we will participate in the buoyancy in the IPO market.
Right. Thank you very much, Mr. Agrawal, for joining us here on NDTV Profit and sharing with us your thoughts on the market, sectors, and of course the quarter gone by for the company. We'll slip into a very quick break right now. Don't go anywhere. We'll talk about all the activity that's taking place in the telecom space.